How we all doing? Okay, I can see how many of us are on board. I can see Ame Agaba, Damilare, Mayomike, Baisi.
Good evening, Coach.
Evening to you all, and Rejoice Krita. Okay, we'll be having some you guys joining up soon. Right, just give me a moment, just give me a minute, please. Can you all see my screen now?
Yes, we can see it, Coach.
All right, so I'm very quick with this. Let's forge ahead since I think I have okay 11. Okay, that's quite a good number. So now, okay, instead of us, please, you would have to take charge of the guys that will join in. Okay, so I can just let them enter. Okay, so okay, let's start. Let's start now. Okay, good morning once again, guys. I hope our weekend has been great. So today we're talking about the secrets behind the Fibonacci tool. Oftentimes we've known that the Fibonacci is a tool used for trading retracements, or in fact, majorly we all know that it's a tool for trading retracements, right? Okay, but there are some basic secrets behind trading the Fibonacci tool. Yeah, so I'll be sharing with us some of those secrets, and we'll go to our charts and see for ourselves how to trade Fibonacci tool in the right manner. Okay, so the first we're talking about is the Fibonacci sequence. Yeah, the Fibonacci sequence. Fibonacci sequence. Okay, let's see. Okay. Okay, the Fibonacci sequence. Okay, that will be our first. Let's make this 12. Okay, this 12. Okay, the Fibonacci sequence. That will be what we're talking about. That will be our first. So now, Fibonacci sequence. A man named Fibonacci, although he's an Italian man, like an Italian man in mathematical. Was it Fibonacci? Yeah, I think so. So he brought about the Fibonacci extension tools, and basically the levels of the Fibonacci are basic key points on our charts. But how do we come about these ratios? We have the 23.4, we have the 38.2, 61.8, and the 100 and 0, right? So now how do we come about this? First of all, you talked about Fibonacci sequence. Okay, maybe some of us that are very good in mathematics, we know the arithmetic progression that is talking about, yeah, arithmetic, that's the AP. So you use that sequence, the sequence of numbers, to get those ratios you are seeing on your Fibonacci tool. So how was the sequence gotten? Okay, what it did was we started from 0, just like this. Okay, let's quickly do that here. From this, and okay. All right. So we started from 0. Now, please pay attention. We started from 0. So what he did, he used the sequence of numbers to get the exact points of those Fibonacci ratios. We started from 0. Then the next number is what? 1. Now, what did he do? He added 0 to 1. Added 0 to 1 to get the next number, which is also 1, right? Now he added the second number. You add the second number to the third number to get the next number, which is what? 2. Now he also added this 1 to 2. That is you'll be adding the previous number to the preceding number to get the next number, right? So now he added 1 to 2, getting the next number, which is what? Which is 3, right? Now he added 2 to 3, getting 5. 3 to 5, getting 7. Then 5 to 7, getting what now? 12, right, guys? Oh, right. Now 7 to 12, giving us what? 19. Please, are we following?
We're following, coach.
Okay, so that's how he got the sequence of numbers, just and so on and so on and so forth. That's how he got all the sequence of the numbers for. You can just add up. So although that's not our major contention for today, I just want to show us how he got those Fibonacci sequence, right? So we'll be forging to the next one, which is the Fibonacci ratios. The Fibonacci ratios. All this should be clear. All this should be clear. Just the next topic now. The next subtopic is the what? Fibonacci ratios. Fibonacci ratios. Okay. Now, what are the Fibonacci ratios? What are the Fibonacci ratios? You see, we've seen those numbers on our Fibonacci tool where we see 0, 23.6, 38.2, 50%, 61.8, and 100%. Those are our Fibonacci ratios. The 23.7, the 38.2, yes, these are Fibonacci ratios. All right. So I don't know. I think I made a mistake on this Fibonacci sequence, and nobody was correcting me. I said 3 plus 5. I said 7 instead of 8. That's wow. 5 plus 8, that's 13, right? 8 plus 13, that's 21. Isn't it, guys? Isn't it? So 13 plus 21, that's 34, right? Yeah, that's the sequence. Then 21.34, that is 55. Okay, 34 plus 55, that will be. I'm not that good in all those. I think the guy said 89. Okay. I think Emmanuel is a good mathematician. Please help us. Okay, 55 plus 89, that is 144, and so on. Just etc, please, etc. Let's not start doing mathematics here. Okay, so that's our Fibonacci sequence. Now, like I said, the Fibonacci ratios, we have Fibonacci ratios. Let me clone this so that I can edit easily. Okay. Okay, now the Fibonacci ratios, I have so we have 0, right? We have 0, right? We have 0. We have what again? From our Fibonacci tool, we have 23.6, right? We have don't forget all are in percentage. All are in percentage, yes. Sorry. All in percentage. Yes. Then the next one is 38.2, right? 38.2%. Now the next one is 61.8%, right? And we have 100. So basically, this is our Fibonacci ratios. These are the numbers we have on our Fibonacci tool. I think we're missing one number, which is the 50. Yeah, I think that's missing 50. I'm missing the 50. Yeah. Now I'll tell you why I'm not putting 50 on, and I'm not putting percentage on 50. Yeah. Although most people might put percent on 50 because I don't consider 50 levels as a ratio. I'll tell us why. Why we are proceeding in this class. So now, we have the Fibonacci sequence and the Fibonacci ratios. Now, so this is how Mr. Fibonacci came about the Fibonacci ratios. Aside from the sequence of numbers, adding the previous number to the preceding number to get the next number, just like in arithmetic sequence. Yeah, so that's 0 plus 1, 1, 1 plus 1, 2, 2 plus 1, 3, 2 plus 3, 5, and so forth and so on. Now, proceeded in getting his Fibonacci ratios from this sequence of numbers. He got these ratios from this sequence of numbers. Now, how did he get this number? How did he get these ratios from this sequence of numbers? It's very, very easy. What he did was he picked four. We all know that, okay, from what most mentors have shared to us, we've known that the 61.8% is the critical level of our Fibonacci retracement, right? Am I right? Can you guys still hear me?
Yes, we can hear you.
Yes, we can hear you.
Yes, we can.
Okay, all right. So we all know that this is 1.8 is the key ratio in Fibonacci retracement. So now, how did he get these ratios from this sequence? It's very easy how he got the ratios from the sequence. What he did was for 61.8. Let me write. Doing this. Okay. How he got all this? 61.8. Okay, for 61.8, right? He divides a number. Divide a number by the preceding number. Yeah. So for 61.8, he divides a number. He picked a number at random, whether 55, 34, 21. Pick a number, divide that number by the preceding number, right? So you get the 61.8 Fibonacci ratio. So let's say we are picking at random. Let's say we pick let's pick 13, 21, or yeah, let's pick 13 now. Now what's the preceding number? That's 21. 13 divided by 21. You can do that for us. 13 divided by 21. Let me have my calculator here. 13 divided by 21. Okay, that gives us 0.619, which is like 619. So that's what in percentage. That's what 61.9, right? Am I right?
Yes.
Yeah. All right. Okay. So that's 1.9. So that's just like 0.1 above 61.8, right? So let's also pick another number at random. Let's pick 21 and 34. Okay. 21 divided by 34. 21 divides by 34. That's of what? 0.6176, which is approximately 0.618. Yeah. Which is approximately 618. So that's in percentage, that's what 61.8. So this is how Mr. Fibonacci came about the ratio for 61, which is the most critical level for the Fibonacci. Now for 32, okay, so let's start with 23.6 now. Okay, for 23.6, let's do this. Okay, for 23.6, right? Now it divides a number, just pick any number at random, divides a number that's in the series by 3 places. Divides a number by another number. Let's see that another number. 3 places in the series. Yes, in the series or in the sequence of numbers, right? In the series. Okay. Yeah. That's so now let's pick a number at random again. Let's say we pick let's 5. We are picking a number three places in the series. Pick five here, and the next one is 1, 2, 3, which is what 21. That's 5 by 21. This one should do that was 5 by 21. 5 by 21.
0.238.
Okay, 238. Okay, that's in percentage we have that 23.8, right? Which is so close to 23.6. Now let's pick another number. Let's pick 8 and 34. Okay, that's 8. That's 34. 8 divided by 34. That should give us what? 8 by 34 should give us what?
0.235.
235. Okay, 235. That is like 23.5, which is 23, which is close to 20. So this is how he got the ratio for 23.6. Now the last one is which is 38.2. The 38.2. Okay, is that is just let's clone this also. Clone this. Okay, for 38.2. 38.2. Okay, this just divides a number by another number. This is 2 places. Yeah, 2 places. Hope I'm right. 2 places. Yeah, 2 places. So quickly, let's do that again. Let's pick a random number, which is let's pick 3 or 5. Let's pick 3. So 3. The next number is what? 8. Yes. Picking 2 numbers, 2 places. Please, 2 places to the right, not to the left, to the right. Let me do this so that 2 places to the right. So I want to pick it and pick one to the right, please. So that don't to be kind of okay. To the right. Two places to the right. All right, guys. That's it. So picking 3 now with 8. So 3 by 8 will give us that. What's our answer, please?
0.375.
375, which is close to 30. That is 38, right? In percentage. So this is how Mr. Fibonacci came about all these ratios. He started from the sequence. He formed the sequence of numbers. He's a mathematician, right? So he started from the sequence of numbers, and from there he got other numbers from the sequence, and he derived the ratios from the sequence of numbers. All right. So that's that for the Fibonacci tool and Fibonacci sequence and Fibonacci ratios. So now, what I will share with us is a secret for trading. You know, we all know that we use this for trading retracements. But oftentimes, if we've noticed that sometimes price, let's take for example, we spot a bullish market, right? Sometimes price might just break through this 1.8, which is supposed to be our last Fibonacci retracement level, goes back down before turning back to our preferred direction. It's not market manipulation. It's just that there are some other levels, some other key levels below 61.8, which we should take note of. So today I'll be sharing those levels with us. So this now brings me to our next subtopic, which is what? The premium zones and the what? The premium zones and the discount zones. Now, yeah. So our next subtopic will be. I hope we are understanding this, please.
Yes, we are.
Okay. Premium. Premium and discount zones. Let me just be okay. Something like this. The premium and discount zones. Yeah. This is very important when trading any chart, whether synthetic or forex or anything. Very, 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 very important, right? So, you must want to ask yourself, what is premium, what is discount? When in a buy trend, right? In a buy trend, let's say market. Let me pick the tool from here. Okay. In a buy trend, in a bullish trend, we have market making series of higher highs and higher lows, right? So we have this market making this. Okay. Now here we have yes, I'll follow you. Okay,
Yes.
now so this is a bullish trend, isn't it? This is a bullish trend. Market start from this low, bust to this point, right? And retraced to create a new higher low, right? And also rally to a new what? A new higher high, isn't it? So now you would want to you would want to get in the buy at this zone, right? Because getting in the buy at this zone, you have to endure a lot of drawdowns to this point, right? So now you imagine the reds you'll be in when market retraces to this point before finally coming to this point to put you in blues, and you see just a little before you get another higher high before coming down again, get a new higher low. Now what do? This is where our knowledge of discount and premium price comes into play. For example, market has okay. Let's say I'm buying let's say I'm buying tomatoes. I think these days tomatoes are very scarce in the market. So right. So let's for example I'm buying tomatoes, right? At this point, this tomatoes rallied high to this. Let's say at this point now I have tomatoes to be around let's say 5,000 Nigerian naira. Let's say I have 5,000 or let's say a basket of tomato, the basket is like 2,000 naira at this point, right? 2,000 naira at this point. Okay, so I don't want currently the price of the tomatoes is at its peak. It's what is at the peak. So I don't want to buy when the tomatoes are so cost, because when I want to resell tomatoes at that point, maybe the price might have come down, right? And I'll be in loss. So same thing applies to this trading. I would want to buy this tomato at a discount price, at a price at a very good price, which will be okay for me to resell, right? So getting in at this point is not advisable for us. So we have to wait for the price of these tomatoes to come down a little bit, right? So at this point where this guy comes in now, this is what our discount zone. We want price to come down a little bit so that we can buy at a discount price. So this price here, your new high low here is what? It's a discount price. So now it also applies to your chart. When you see market rallying, but an impulsive buy, I think we know what I mean by an impulsive buy. That is, market is rallying up without creating any low, just going up. You don't want to enter the market because you might get burnt. You wait for price to retrace. Now, at this point where you've seen a retracement, maybe market has started coming down from, let's say, from this point now. Okay, let's say from this point, you see, sorry, from this point here, market has started coming down. So at this point is where you play. At this point here, you place your Fibonacci tool here. We call here the swing low. We call here what? The swing high. Like here is the low. Here is the what? The next high. Now you want to place your Fibonacci retracement level at this point. Now, then the last one at this point. Then you need to wait for market to what? To get down, to sell down till it hits any of the what? Discount zones. Yeah, I'm going to show you guys our discount zones. So until you what hit our what discount zone, then at that point we can be confident that now the market will start buying. Then you get to the market and you see market will move all the way to this point until it gets to this point. Now before it started retracing again to maybe probably this point before it buys again. So now in a bullish trend, we would want to what? Enter the market at what? At a discount price. Right? So that's also for our sell trend. Our sell trend, we would want to get into the market at what? At a premium price. For example, a sell trend, if you have sell trend like this, market's creating something like this. Okay. Sorry, I think okay. So let me close this quickly. So this is our lower high, right? Isn't it? Yes, please. This is our lower high, isn't it? And here is our lower low. Lower low. So now market is selling. Market is selling just the way we explained the bullish trend also applies to what? To our bearish trend. You have market selling down all the way down here to this point. So you don't want to get in at this point. You have to wait for a premium price to sell, right? A premium price. After market retraces back to this point. So at this point here, here's what? Your premium price. You take your trade here and market goes all the way down here. Then how? Right. So as we're saying, we've talked about the premium zones and the discount zones, how we should buy from our discount zones and sell at premium zones, right? So that's that for that. That's that for now. So our next top topic now will be showing us how this Fibonacci tool works. Now let's go to. Okay. Don't worry, I'll give you the settings on phone. I'll give you guys the settings on phone, so that won't be a problem. So now, let me pick. Let's pick. This is the Fibonacci retracement. Okay. Fibonacci retracement. Okay, so this is guys. So this is a Fibonacci tool. So let me see the settings. Let's see. The settings. So you see on this like I've said, these are our zones. We have 23.6, right? We have the 38.2, isn't it? We have 50, we have 0.6 wide, which is 61.8, but these ones are not there. These 78.6 are not there. And also the 88.6 is not there. So now, guys, this These are our levels. We have just our normal Fibonacci levels on our phones. But oftentimes we find out that okay, sometimes price might overshoot this 61. This is 1.8. This is 1.8. Yes. So let's see. Now this is it. This is our normal Fibo tool. We have 0, 23.6, 30.2, 50, 1.8. What I'm calling, 0.236 by times 100 will give us 23.6. This will give us 30.2. This will give us 50. This will give us 61.8. Then 100 will give us 1. Give us 1. All right. So that's why I'm using this. Okay. So now, guys, you see, when placing your Fibonacci level, most people have asked, should I place it on the wick or the body? Okay, now, if you are placing the first one on the wick, that's the top of your Fibonacci on the wick, make sure you also place the down one on the wick also. If you are placing on the body at the top, place at the body at the bottom. That's what's behind it. So now, you would want, most of you might ask, okay, why am I placing it here? This is what your low. This is your what? Your next what? Swing high. This is your next high. This is what? This is your low. Swing low, swing high. Understood? So now, I want to catch this market because this market was at this point. This market was at this point. Yeah, so it was at this point. Now, I can't just enter the market, but I've seen that the market has made a little bit of retracement at this level. At this level. So I will place my Fibonacci tool here, then extend it to the last low here. I wait for market to sell. Now the market will sell down, break all these zones, You might have reactions at these zones because these zones are, mind you, all these zones are also key levels like minor supports and minor resistance are on your charts, right? So you see, price will just keep coming down, break the 50%, come down, breaks 1.8, comes down. Now it came to this point here where I have my higher low, right? So now it got to this point and it bounced back and rallied up. So I'll get in at this point. Now I'm not saying getting at 61% is wrong. It's not wrong. It's never wrong. It's never wrong. So I'm just telling you this is how normal. This is what you know. This is what you guys know of Fibonacci retracement. But there's a lot to there's more to that. There's more to it. So it now brings me towards my discount zones for my bullish trend. So now let's go to settings. On my Fib level, sorry. This is not Fibonacci. Okay, so I'll show you guys the settings on your phones. This is just my system. I'll show you guys settings on the phone so that you guys can go and delete those levels. You don't need it. I'm saying you don't need it. Anybody asks you, tell them that I said you don't need it. You don't need this 28.6, delete it. You don't need this 30.2, delete it. All you need is what? Your 50%, 61.8. Now you add 78.6, add 88.6. Yes. So for me, these are all the levels I use for my Fibonacci. I don't use this too. Don't use this, not use this. Although market might give reactions at these zones because they are also key values, but oftentimes you find out that these zones are just, it will make your stop loss be so wide that you don't need it. You don't need it. Excuse me, all you need is what? 50%, 61.8. Now you have a new level and this, right? So okay guys, now you just look at this. Just look at how accurate this is. Market came all the way down and look at where it's reversed at what? 78.6. You understand? Now imagine imagine when market came to, let's say, 23.6 that was here, and okay, I saw a reaction at that point. So let me enter. If I'm entering at that point, my stop loss will be so wide. so wide that when market comes to this zone, let's say I placed my stop loss at this region here, my stops at this region. It will be so wide that market will have I'll be in long red. Imagine if Mr. A took his own trade from here and he put his stop loss here. Then Mr. B took his own from, let's say, 61.8, which is also good. The stop loss should jump from here to here, which is not bad. Then maybe Mr. C took his own from 70.6, which is from here to here, which is also not bad, right? So your discount zones are zones. Now, take note of this, jot this down. Your discount zones on a bullish trend are those zones below your 50% Fibonacci level. I repeat again, your discount zones for a bullish trend are those zones below your 50% level. Are those zones it is acceptable by smart money traders or BTM traders, which is beat the market makers traders. These are the zones where they are comfortable taking trades from, because you have a very good risk to reward ratio, right? So when market comes to this zone, I put my trade and look at how market has gone in my favor. So this is your first target. The next high is your first target. You see, I'm risking from here to here to get from here to this point, which is like 1:3. Risking 1 to get 3. Wow, I'm good. I'm good with that. For me, when I get 1 to 3, or let's say I get 1 to 5 or 1 to maximum, when I get 1 to 5, for me, when I get 1 to 5, I take partial profit and probably I close some positions and let the rest to run. But when I get to the new high, whenever I get to the new high, I take profit, I take partials and let the rest to run. I place my SL somewhere above my enterprise and let the market do its thing. So that's that for our bullish trend. So also for our sell trend, let's do sell trend here. Let's pick Fibonacci 2 here. Okay. So we're picking it from my swing low to what? My swing high to the swing low here. Yeah. Okay, guys. Look, so market started from this point, came to this level here. Came to this my new lower low here. Now it traced back to what? Lower high. And look at the point. It traced from what? 78.6. Market might also retrace from this zone. Not bad, because you see your risk reward ratio is very good. This way here I can see 1 to 2, very good. Now it can come to this point, good. Come to this point, good. So these zones. So now for a sell trend, your premium zones are those zones that are above your 50%. For a sell trend. This I hope this is clear. So discount zones. Let's quickly do this so that okay. Discount zones. So these are discount zones. These are what? Sorry, I have to clone this first. These are what? Premium zones. Yeah. So this all there is about the Fibonacci tool. Aside from Fibonacci sequence, Fibonacci ratios, premium and discount zones, and the rest. And we've seen the zones, which I'll be sharing with us. The zones I'll be sharing with us how to do that on your phone. On your phone, so you can have. I think you can do that. Just go to the what's it called now? Just go to your settings. Go to your levels, delete all those levels, and have new levels, right? So that's that for Fibonacci. Sorry, let me All right. All right. All right. So now let's go to our charts. Let's go to our charts and see these things. Let's go to our charts and see how to trade all these things. Okay. Okay. Let's delete all this. Okay. Mentees, hope there's no question so far. Hello,
Sorry, I just have an advice.
Advice.
Yes. All those things that you wrote in the blue column, the color are just like the same thing. Maybe when the background is blue, you should have used red or yellow so that we can see it perfectly. That's
sorry.
my advice.
Oh, wow. Oh, wow. Okay. Sorry for that, sir. Sorry, I was just saying that it's perfect. So I'm sorry for that. But I think we could see it. Just even though it's kind of hazy, we can see it. We could see it, right?
Yes, it's clear.
Okay. We'll take it. That will take effect from the next class. I'm sorry for that, guys. Okay, so let's quickly go to this VIX 25 chart, right? Yeah, this VIX 25 chart, right? So looking at this time frame, this is a 1 hour time frame. Yeah, 1 hour time frame, and we've seen that on the 1 hour market is currently on a sell trend. Currently on a sell trend, yeah. Currently on a sell trend. Reason I'm using this 1 hour as my case study. Reason because this reason we can see that okay, market was let me quickly annotate so that we can get it. From here we have the first low. This is higher high, right? Higher low, higher high, higher low, right? Higher high, higher low, higher high. This is higher. This is not actually a higher low because it's the same low. It's a low. It's also a low because it's in line with this guy. So it created a new higher high here. Now it came all the way down and what? It broke structure, isn't it, guys? It broke structure, forming a new low here. It broke structure. Oh, sorry, guys. Okay. Let me remove this. All right. So, guys, you see, this guy here broke what? It broke structure at this point. What? It broke structure. Why does it broke structure? Let's basically look at it from here. This was our last low, isn't it, guys? So our last low, and this guy came all the way down. It closed below what? This low here. So that means it has broken our what? Our bullish structure, isn't it? So now we can see that after I broke the structure here, it's what? After this candle what printed, and this candle here printed. I think my mentee should know what this candle signifies. This candle here. You see that there was a rejection here to the upside. So now this is a new high that was formed, right? And this is a low, isn't it, guys? So now picking my Fibonacci 2 to see, okay, now this guy has established a sell trend because why? Because it broke the last low, isn't it, guys? Yes. Please, are you with me, guys?
Yes, we're with you.
Okay, so you see how this guy broke the bullish structure to the downside, right? So it broke the structure. I should be expecting what? That this guy should go up to form a new lower high, isn't it? Because just like I said, the price of tomato was here. He sold to this point. At this point, it's at his peak. So I can't just sell here because if I'm selling here, you see that the price will go against me before it comes back to my direction, which is very, 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 very wrong, right? So I would want to wait for this price to retrace a little bit before I enter my sell. How do I do that? I already know the knowledge of my premium. I'm looking for what? My premium zones. Because it's what? It's a sell trend. I'm looking for what? The premium zone. So I pick my Fibonacci 2. if I'm starting from the body, like I said, if I'm starting from this body here, this is the body here. As what also end at this body. If I'm starting from this week, as you end at this what at this week. You understand, guys? So I'll put my fib right from here. Okay, guys. Okay. Wow. Okay. That's that. That's it. All right. Next guy. So you have to turn the tip very well. Okay, guys. So this is it. You see, this market established a low here. After broken structure, it established a low here, right? So now I'll draw my retracement, and I know that I'm looking at for what all my premium zones, which is from any price above what 50%, right, guys? So I'm looking to what take a sell at this zone here, at this zone. And that's 1.8, 78.6, or what 88.6, guys. So and look at how market got towards 1.8. It broke it a little bit to the upside, and it injected all the way down, So guys, can we see how this has played out? So you could imagine you place the trade at this point. You got in at let's put this. Got in at say you got in at this one. Sorry. Okay. My stop loss would be at the low created, right? So imagine I entered at this point. If I entered at this point, I entered at that point, and my first take profit would what? Would be, like I said, would be at the low here. Yes, at the low here. So what's the risk to, you can see the risk to reward is what 1.95, which is almost 2. So, but you see, when market broke structure, after it takes out this low here, what we can just do is you put stop loss, like I said, you put what stop loss at entry, then you'll be looking to what to find the next low, which is at this point. This will be what your next take profit, which is what at this point. This what 3.84, almost 1:4. So this is how you could get your clean trades from a Fibonacci tool after a market retracement, after a break of structure. Just draw your Fibonacci tool from the point where it started from, which is at this point, and the point where it was reversed from. Just draw from here to here. And when market got to this level, it sold all the way down to this point. You would have made full cash just from this movement alone. That made good money. So that's that about that for trading and Fibonacci. Just identify in any time frame you're trading, but make sure, like we always say to our guys. I think my mentees knows that we always look out for the daily bias. That's the higher time frame bias. Is it a sell? If it's a sell, that means today I'm looking for a sell on this asset. If it's a buy, I'm looking for buy on this asset, right? If my D1 is giving me a buy structure, so I'll be waiting for a buy movement on H1. So anytime I spot a buy on H1, wow, I take my trade and I move. So that's trading the smart way, trading simple and beating the market makers. As easy as that. So I hope we are clear on this. Any question, please? Any question, please? I have another class starting by 9. So I would want to just for me, I'll be late. So please ask questions, please. Head of house, head of house, Joyce Peter.
Hello, sir.
Okay, sir.
Is there any way we can use this on our phone without using the system?
Yes, exactly. Yes, there's a way you can use it, sir. There's a way you can use it. Yes. I will drop an explanation on how to use that. Yes. I'll drop the video. I'll drop the video on the channel so that you guys can see how you can use these zones. Have I answered the question, please?
Yes, sir. Yes, sir. Yes, sir. Thank you, sir.
Any more question? Although I'm still seeing this I still see this guy selling a little bit down. Yeah. I'm seeing something like this, guys. I don't know. I think I've seen something like this. I don't know why you guys. Wow. Okay. Like market until market. I think I'll if I for you guys, I would want to put an eye on this trade. Come in, let me see because I like getting something precise. Let me use line. I want everything to be okay. Please, okay, yeah. So I'll wait for. So because I'm seeing that this market will still a bit probably to this point here because there is no problem to this point where it's either here or here because there's another block here, so we might want to come and test the other block. But I think this guy might have been tested, so I think if I want to come down to this region here before it breaks this trend line, the test and buy because I think this I'm seeing a very long buy. So you guys might want to keep an eye on this. Although I'll call it on the channel, when it's ready. That will be a problem. So as for the mentees, you don't have to worry about trading view. What I'm using currently, I think it's in our in our next 3 classes, I'm teaching us how to use trading view to analyze synthetic indices, all synthetic indices. So I think that will be on our So our next class will be on okay. I'll check our topics. I'll check what we have on our next class. I'll check that because I want us to switch to week-off theory by next week and probably start our full course on smart money, how to trade the smart way. Yeah. It's week off before smart money. All right, guys. So, any question before I go?
Coach, good evening. I have a question.
Okay, sir.
Instead of drawing the Fibonacci retracement from that last swing low, can we draw it from the second swing low?
From this side? This one?
Yes, from the second one. No,
this one
the
here?
other one.
This one?
Yes,
yeah?
There and the other. Yes.
This point, yeah. This way, this way we do it. We do it actually from here to here. See, I'm using the wick of this candle here. I'm not using this guy. You know, before now we've not entered this. Before now, market just came to this point and broke structure, right? So and we saw a reversal at this point. So probably you were seeing the market at this zone. Let's say we just came to our chart and we see the market at this zone, but we don't know at the point where this market will reverse. That's why we drew our Fibonacci retracement from this guy to this low here. But this is our swing high, this is our what? Swing low. So we drew from here to here and we took our trade from 61.8. Some might wait for 78.6, which is not bad, or 88.6. Sometimes market might make such move to other 78.6 or what? 88.6. I think there's also 94, but I think 94 is really tested. So we are using this. So market comes to this point, picked our order here, then fell down all the way. Came here, new lower high, came down here, low, high, low. So I think I'm seeing, I think unless this trend line gets broken and retested, giving us probably an overset and shoulder before going up, I think this guy is still much, he's still selling, he'll still sell for now. So any more questions?
Hi, Coach. Can you hear me?
Okay, I can hear you now. I can hear you.
Yes. So because when we take that entry, our first TP will be anticipating it at the low, at that low.
At the low, yeah, at this
Yes.
low, yes.
So is it advisable to open two positions, let's say 0.22 positions, or just to open a bigger lot size?
Okay. People might, some guys might want to open 0.2, 0.2 or 0.4. Anyways, they're all better. They're all good. But the trading the smart way or trading in a better way is by taking one position at this entry here, then leaving one, because that way, even if it comes back to hit your break even, you've already taken something from the market, right? So
yeah.
At this low, you might want to just take profit. Take profit at this low for just a single position. Then you wait. When market comes here after rejection, some people who trade aggressively, like myself, will also enter another position at this point. This is how I have all those my multiple positions you always see on my charts. I have so many positions. It's by trading with Fibonacci too. Please, mind you, until a candlestick completely close outside this trend line, it's not broken. It's never broken. So don't mind this candle that's going out. If you like, it should go out. If it doesn't close above it, it's false. Okay, guys, any more question? Or if you have any question, you can just write, like I said. Okay, who's talking?
Okay, my name is Ayn.
All right.
Sorry, I couldn't make it on time. I just wanted to confirm. Are we getting this video of this?
Okay. As for the video, okay, the video is meant for my mentees, but for this one, I will share with you guys. Okay, I promise I'll share with you guys for this one. I'll share with you guys. And I also share the video for this Fibonacci tool, the new Fibonacci to this settings for Fibonacci. I'll do a video probably tonight, and I'll drop it on the channel for you guys to watch.
Thank you so very much.
All right, you're welcome. Once the head of house compiles the video, I'll also drop it on the channel. Okay, guys, any more questions? Okay, if you have any questions, just write them down. In our next class, you can ask, I will treat it. Probably you might want to watch the video over and over again to get some things that are not clear. Then I'm always available. If I'm not available, just drop it on my DM, and when I come, I will answer all the questions. All right, I think we've come to the end of today's class. Yeah, I think that'll be it for today's class. I have another class. I'm already late for that class now. So guys, have a wonderful weekend and enjoy the rest of the day. All right, guys. Good night.
Good night, Coach.